Welcome to Vivid Box HQ. The UAE just quit OPEC. And it's not about oil, it's about power. On May 1, 2026, the UAE walked out of OPEC. 57 years of membership gone. The first defection of a major Gulf producer in modern history. Watch that orange segment. 10% of the cartel's total production capacity, now unconstrained. The question isn't whether this matters. The question is who breaks next. While Riyadh cut production to prop up global prices, Abu Dhabi quietly pumped more. Between 2021 and 2026, the UAE ran 250,000 to 300,000 barrels a day above its agreed ceiling, every single month. Saudi Arabia was the enforcer. The UAE was the beneficiary. That contradiction held until it didn't. See that gap between what each side produced and what they promised? That gap is the divorce. ADNOC has a number in mind: 5 million barrels a day by 2027. That's 148 million barrels above what OPEC ever permitted them to produce. Analysts put the sustainable ceiling lower, at 428 million. But Abu Dhabi isn't thinking about sustainable. They're thinking about the energy transition and the narrowing window before it closes. Watch the bars rise. The gap between quota and ambition is the entire argument for leaving. Saudi Arabia had already been carrying this alone, operating at roughly 3/4 of its 12 million barrel capacity while others cheated. That was always a temporary position. Now, with 10% of cartel output beyond its reach, Riyadh faces a fork with no good options: hold discipline with a weakened coalition, or flood the market and let prices fall. Follow the flowchart. Both paths lead to the same destination. Iran's closure of the Strait of Hormuz in March 2026 changed the calculus for every barrel the UAE ships east. China, India, Japan, the three largest importers, now face a UAE pivoting toward LNG, not crude. ADNOC has already signed long-term LNG deals with all three. The crude relationship is quietly unwinding. Find the flow arrows. That shift from crude to gas isn't a detour, it's the new direction. Iraq has been labeled a serial quota buster inside OPEC for years. What keeps it in the cartel isn't principle, it's Gulf financial support, which is now conditional. Fiscal pressure, surplus capacity, regional escalation, any one of these triggers is already present. All three together. And Iraq doesn't wait for an invitation. Trace the arrows. Every path through this diagram converges on the same word. This story reshapes crude markets and geopolitical leverage across 3 continents. If you're following energy politics, hit like and subscribe for breakdowns of structural shifts that move supply chains. See you tomorrow.